Hello, I'm Jeannette Lowe, Director of Policy Research at Strategas. Strategas partners with Baird to provide our market strategy expertise to financial advisors who serve Baird's private wealth clients. Our policy team focuses on the policy changes happening in Washington, D.C., and the impact of those changes on the financial market. This week marked the inauguration of a new president, and I'm going to take a little time today to talk about the prospects for additional fiscal policy stimulus and tax changes under the new administration. Following the result of the Senate runoff elections in Georgia held in the beginning of January, Democrats now have control not just of the presidency, but the House and also the Senate, even though they have very slim margins in both chambers of Congress. But that change in control in the Senate means that we're likely to see higher fiscal policy stimulus passed than we would have if the Republicans had retained control. However, it's also important to keep in mind that Congress just passed a pretty sizable fiscal stimulus package at the end of December. It was a $900 billion package that included additional unemployment insurance benefits, small business loans, $600 checks to Americans. And we saw $130 billion of those payments going into American bank accounts in the first 2 weeks of January. Now, Biden has already released a $1.9 trillion economic relief package. And we expect Democrats to pursue fiscal policy stimulus in two stages in 2021. The first would be a smaller package that would focus on additional income replacement and could include potentially another $1,400 in checks to Americans. And that could pass by the end of February. The second would be a larger package that would include infrastructure spending, climate change spending, as well as other priorities. And that could pass more along mid-year. Now, how the Democrats go about doing this will determine what the size, scope, and speed with which the packages can be enacted. If Democrats decide to work with Republicans and compromise, then the packages could pass with 60 votes in the Senate, but that would lead to smaller packages. Or the Democrats could choose to use budget reconciliation, which is essentially a complicated process that puts restrictions on what can be included in a legislative bill, but it also allows the bill to pass with just 51 votes in the Senate. So even if the Democrats go that route, they'll still be somewhat constrained and will not be able to pass all of their spending priorities. Now, it's the second package where we could see tax increases come into play, as they'll be offset by higher federal spending, which will make it easier for members of Congress to take that politically challenging vote to raise taxes. Biden has proposed a number of tax changes, and I'm just going to focus on the ones that we think are most likely to be enacted. First, the lowest hanging fruit is for them to raise the highest income tax rate from 37 to 39.6%. Second, Democrats could lower the value of income tax deductions to 28%, though it would likely include exemptions for charitable and mortgage deductions. Third, reducing the value of the income tax deductions to 28% would also allow Congress to reinstate the state and local tax deduction, or the SALT deduction. If you remember back to the 2017 tax law, that limited that deduction to $10,000. So it has been a top priority for Democrats to reinstate the deduction, and it'll also help high tax states that are now seeing outmigration. An increase in the capital gains and dividend tax is also possible. Biden has originally proposed to equalize the income and capital gains tax rates, but because we have a divided Senate, we think it's more likely that if there were to be an increase in the rate, it would fall in the 25 to 28% range. Estate tax changes have also been proposed. And again, the legislative math is going to make it difficult for those changes to come into effect. One target would be to raise the rate of the estate tax. But again, given the math in the Senate, that doesn't necessarily mean it's a given that will happen. With regard to corporate taxes, Biden has called for raising the rate to 28%. We think it's more likely to fall at 25%. And it's not likely to go into effect until 2022. And all that, of course, can depend on when the legislation is ultimately enacted and what is the economic outlook look at the time. An increase in the corporate tax rate would also automatically trigger an increase in the tax on foreign source income of U.S. multinationals. And Biden has also called for doubling that tax rate to 21%, and that could also be on the table. Ultimately, though, additional fiscal stimulus and tax changes are going to be dependent upon the political environment in Washington, D.C., and the strength of the U.S. economy. If we see the COVID-19 pandemic getting under control, and the US economy reopening in the first half of the year, then that could limit how much additional fiscal policy stimulus is enacted this year. So there's still some things that need to be figured out, and we'll be watching as we go forward.